Hello, good morning, good afternoon, everyone, from wherever you're joining us from. My name is Emily, Community Manager at PropTech Buzz. It's a pleasure to welcome you all to today's special launch for the South Africa Property Finance Network community. I look forward to have you in this session. Uh, for those who don't know about PropTech Buzz, we are all about connecting the property and PropTech ecosystem, and we bring together innovators, investors, and professionals to share insights, collaborate, and grow the industry. And one of the ways that we do this is through our communities, which you can find online. And these communities are curated spaces where we like the people who are like-minded individuals like you come together around specific interests to share knowledge and build meaningful connection. So we are so excited that we are launching this specific community, South Africa Property Finance. Congratulations to you all, those who come from South Africa and all over the world. The community is led by Nande. Um, so thank you so much, Nande. I will just welcome you to introduce yourself. I would have introduced you, but let me give you the opportunity to introduce yourself and introduce your guests, and also welcome us. Tell us about your community. Tell us what we should expect from your community, and we look forward to just learning more about it and to joining. So I welcome anyone who is joining us live to be part of this community as we are going to hear from Nande. Thank you so much. Nande, over to you.
Thank you for that, Emily. So I'm Nandi Kisa, as Emily had mentioned. I work in property finance as a deal manager. I actually studied property studies at the University of Pretoria, and I veered off for a couple of years, but I think about 4 years later, I found my way back to my first love. I'm absolutely excited to have this community going, and being at this point where I can run something within the property space is so exciting for me. I've worked and serviced different products within lending operations. And if you guys have any questions, if we're using maybe words that you're not sure what it is that we're talking about, feel free to ask questions so that we can explain. But basically, I've been in lending operations for a couple of years. I've serviced different desks such as leverage finance, aviation finance, energy finance. And all of that time, I was trying to find my way back to the property space, and I'm happy to be here. And joining me today are property economist Mihlali Kyopo, deal maker Mugameli Moiketsi, and structured property finance consultant Neo Mashilo, and they will introduce themselves. As well. They'll run us through basically, in a sense, their CV. They'll tell us where they studied, how they got to do what they're doing today, and maybe what they did before, as well as just the transitions, the whys and the hows in between. We'll start with Mugameli, and then we'll move over to Neo, and then Mihlali. So Mugameli, the stage is yours.
Hi Nanda, thanks for that, and hi everyone. Thanks so much for organizing this event. It's really going to be an exciting journey that we're all going to be on, and I feel very privileged to be here with everyone. So I mean, mine is actually pretty straightforward, I guess. My name is Mokamed Miegetse. Um, I studied quantity surveying at Wits University. And towards the later part of my honors year, I think that's when I realized that I wouldn't necessarily like to be part of the brick and mortar family in the construction sense, but a little bit more in the finance sense. And I was lucky enough to get a job at Nedbank in CIP, where I was part of the operations, so the lending middle office in aircraft finance for about 4 years. But obviously, aircraft finance wasn't necessarily what I'd studied in university, but it was asset backed finance. So it aligns closely to property. Then that's when I went into TAF. So TAF is a commercial property company. It specializes in inner city regeneration and redevelopment, focusing on a niche market, which is purely residential property, which is residential development, residential leasing and letting, so rental stock, if you will. And they specialize mainly in affordable housing, but now I've seen that they're stretching their wings to just playing in commercial property. I was there for about a year, and then an opportunity here at FNB, which is where I am now, came about, where I'm a deal maker in property finance, looking after the Tshwane region.
Love that. Love that. Thank you for that, Kameli. And then Neo, you're next.
Nice.
Sure. Hello, everyone. Hello, Nande and fellow panelists. It's very excited to be here. So I'm Neo Mashilo. I studied at the University of Johannesburg, studied accounting. Yes, I always wanted to study accounting. It's never anything else. And I qualified as a chartered accountant. Did my articles at the Industrial Development Corporation, which was, I think, a crucial part of how I got to where I am right now, because I had zero ambitions of going into the audit field like most chartered accountants do. So I wanted something a little bit more, I think, different, that would challenge me, and that would give me, the type of career that I wanted. So the IDC was a great step along the way to making me realize that I wanted to be a deal maker. And so, but when I left the IDC, I didn't necessarily have an idea of which field I wanted to go into, because at the IDC, you have multiple exposures to majority, industrial and manufacturing type of entities. So when I left there, I didn't necessarily have an idea of the field that I wanted to be in. I left the IDC, I joined Yum Brands, KFC Africa. I worked in the development space there, meaning worked on any new restaurants that were opening all over South Africa as well as Africa. And I worked, in an analyst capacity, and reported directly to the chief development officer there. While that was a great role, it wasn't what I necessarily wanted, because it wasn't in the deal making space, essentially. Even though you did get to, you were frontline, you dealt with franchisees and etc. Then the opportunity to join one of the banks in South Africa, one of the prominent banks in South Africa, came along, to join that team as a deal maker in the structured property finance space. And so I've been here for the last 4 years, where we essentially have no bounds in terms of which regions we look at. We look at all over South Africa, and we do some foreign or international transactions as well. We do anything really that's commercial, retail, student accommodation, residential, industrial properties, warehousing, really anything really that makes sense from a commercial perspective, we play along there. Thanks.
Fantastic. Thanks, Neo. And then Mihlali, if you could introduce yourself.
Good day, good morning, everyone. I'll try to be quick. I just have a quick work emergency that I need to deal with for 3 minutes, but I'll be back in the live. I'm Mihlali. My professional journey started at NMU. I did a Bachelor of Human Settlements Development, where I majored in property, urban planning, and construction. I grew a love for property, and then I did my master's at Wits in property studies. And then my professional journey started at Transnet in asset management, and then I pivoted to project management because I wanted to understand property in the physical sense and not just in the financial sense. And then I moved completely away from property for a bit. I moved into consulting, and we were dealing with terminal development. And then I moved to transaction management at CBRE Accelerate, where we were servicing ABSA corporate real estate. And now I am working as a property economist at Western Cape Government, which is quite different, really, in the sense that
it's government, and it's not driven by profit, it's driven by service delivery. As much as I've worked at a state-owned entity, but it was still driven by profit. So it is a different ball game for me, but it is pretty exciting. That's me in a nutshell. Thank you.
Awesome. Thanks so much. Thanks, Mihlali, and thanks everyone for those beautiful introductions. I feel like I have questions for you guys at the end, just based off of your intros. But for now, I'm going to speak on the vision for the South African Property Finance Network community, just so that we're all on the same page as to our why. So the vision for the space is to build a community that's engaging. The vision is actually quite simple, but it's powerful. It's to build a platform where knowledge and opportunity meet, where South Africans can actively participate in the property economy. For too long, property finance has felt complex, fragmented, and in many cases inaccessible. Whether you're a first-time investor, a developer, a financier, or just simply curious about the space, or you're a new graduate just curious about getting into the space, for me, I feel like it hasn't always been clear, or just how you can navigate the space, how you can learn, connect, and grow. And this community exists to change that. We're building a space where we can share insights openly without gatekeeping, where we can build relationships across the entire property value chain and not limited to property finance, and where we can share new ideas, right, without holding back. A non-judgmental space. Our goal is not just to talk about property finance, but to demystify it, because I felt like in my pursuit of just wanting to come into the property finance space, it felt like a mystery. It felt like this space that was like a members only club. And I think that's why we exist, to take away that mystery that comes with this space, because the more people understand how property finance works, the easier it is to access. And that means we get more deals done, more developments and acquisitions happen. And when that happens, we contribute meaningfully to the economy. And that leads to transformation in South Africa. So for me, this is more than just a network. It's a movement towards a more inclusive and innovative property finance ecosystem. And it's not something that I can build alone. I'm excited to build this with you, with our guests today, as well as those who have joined us on different platforms, whether on PropTech Buzz, LinkedIn, or wherever you're joining us from. And then that being said, I would like to demo the community. I know I sent the link to quite a lot of the people who are attending on LinkedIn, and some of you have joined. So if you have joined, feel free to navigate with me, and also just maybe use this opportunity to introduce yourselves. Just tell us who you are, maybe where you're coming from, and what it is that you do. And we're not asking what it is that you do so we can size you up, but just so that we can get to know you, right? So we know who we're talking to. In the same breath, how on LinkedIn, you've got a picture, you've got a bio. That's what we're wanting to see in order for us to build, a network or a community. That is, I'm just looking to share my screen. Give me a moment. And then I'll run you through the platform. SA Property. There we are. And can you guys see my screen? Maybe if my guests can confirm. Are you able to see my screen? There it is. Yeah.
Yeah, we can see it.
Happy. Okay. So this is our platform, right? And this is what it looks like. And some of you guys would have already been there already. And thank you to those who've joined. And for those who haven't joined, the link is in our chat. Please feel free to join. And as you join, like I said, please update your details. So your name, your surname, update your profile pictures, tell us about you, and maybe post just to tell us who you are, where you're coming from, what it is that you do, and maybe what your expectations are for this community. Maybe what you expect to get out of it. So if you how to navigate, let's just see. So you'll see up here, there's communities. And when you click on communities, you'll see more than just the SA Property Finance Network communities, because there are a lot of thriving communities on this platform. And if those are of interest to you, feel free to join. You're not limited to joining just the SA Property Finance Network. Feel free to join as many communities as you would like to. in order to gain knowledge about different things. Like we said, this is not just about property finance. There's PropTech communities on here. There's property management communities. There's just an array of information that, this platform gives you access to. But as it pertains to SA Property Finance Network, this is our landing page. You'll see we've got 4 different channels. There's general property finance news, distressed assets. And this is particularly leans to something that I'm currently working on that I'm hoping to introduce to my community soon enough. And then there's property finance opportunities, which speaks to the thing that I was saying before about, why it is that we're doing what we're doing, is that I found that it's quite difficult to navigate, to find opportunities, firstly, and when you do find them, the navigation around them. Whereas here, you will be able to post opportunities within the space, and from that place, you have this access to this big network and community where you're able to ask questions to say, look, so and so you're a deal maker. I'm looking to get into the space. Is there a way that you can help, or are there any deal makers on the platform who can maybe help me, and so on and so forth, whatever your interests may be. So you'll see we've posted quite a few articles already. And just to say, so I've posted 10 articles so far, but I just want to add that this is not just for me to post. Anyone and everyone who's part of the community can post. If you feel like you've learned something new, or there's something in the news that you think we might find interesting, or you're wanting to start some kind of conversation, please feel free. You would then share your thoughts right here. Just ensure that at the top here, you've selected the correct maybe channel that you want to post under, and that you're also under the right, under the right community. So if we go further down here, you'll see all the different things that I've posted. And as I said, feel free to post. This is a space for all of us to knowledge share and engage. It's not just about me. So I'm just going to go down, and then on the right here, we've got our chat streams where we can have more informal conversations. So if you look at that, it literally looks like a WhatsApp chat. So that's where we'd engage in our more, in conversations that are not as formal as a post. And then I just want to stop sharing then. If you guys have any questions, feel free to go ahead and ask at this point. But for now, I'm just going to stop sharing. And then from that place of having seen our community, for those of you who are watching, please remember to join, tell us about yourself, give us your details. And by details, I mean name, where you work, etc. Nothing more than that. And then that being said, we're just going to go over to our roundtable discussion where we're going to ask our guests a couple of questions. We'll start with Mihlali, and our question for Mihlali is just based on what you're seeing now in terms of macroeconomic trends, what macroeconomic trends are currently having the greatest impact on property finance in South Africa?
Thank you, Nande. I think I'll point out the most obvious one, which is the ongoing geopolitical instability with the Middle East conflicts, and the now recent global oil price shock. I think for the past 2 years, we have seen the Reserve Bank going on a rate cutting cycle. And consequently, we have seen a pickup in activity in the market, with visibilities reopening, buyers coming back into the market, rentals improving, as well as just boosted investor confidence. So now that might take a turn, hopefully not, with the ongoing events, as the Reserve Bank has come to a halt with their cutting. And I think that also we should maybe prepare for sustained, for like a sustained halt, or at worst case scenario, hikes in rates. If in the current price per barrel, we continue to exceed, as well as the weakening of the rand, as well as maybe inflation going above the upper band of what the Reserve Bank is currently targeting, then those will be our lived realities, and not just things that we are modeling in our sensitivity analysis or pessimistic models. So that also then trickles down to tenant and household affordability. There's a lot going on there with hike in electricity tariffs, rise in fuel prices, adjustments in rates and taxes. So it's not just a single shock. There's a compounded effect that is compressing disposable income. So I think that's the main thing that we have to look out for currently in the economy and political space globally.
Yeah, spot on, and thank you for that. And I think we're starting to feel that pinch in terms of fuel and diesel costs, right? And then, Nevo, with that in mind, what then differentiates a deal that gets funded from one that doesn't in the current environment?
Yeah, I think Mihlalo was completely spot on. And we live in the day-to-day where we see the trickle-down effect of all the macroeconomics economics factors that Mihlalo was pointing out. And so I think as a result, you have banks or finance providers moving from a position where they are chasing growth and volume to a position where they're chasing resilience and capital preservation. And that really just means that instead of chasing quantity, you chase quality, right? So deals that typically get are successful or get approved are deals that remove uncertainty across various risk factors. But I think most importantly, if you remove uncertainty across or around your income, your sponsor's credibility, as well as what we call downside protection. Essentially, just so in your income, that speaks to your leasing, quality of tenants, as well as your strength in cash flows. So if you are able to demonstrate quality leasing, quality tenants, and strong cash flows in the form of long-term leases, you are in a good space. From a sponsor credibility perspective, there we look at who you are, what you've done in the past, and your ability to execute or deliver from a what we call delivery risk perspective, if you are speaking about a development. And if you're speaking about an existing property, we're looking at your ability to manage the asset and effectively optimize cash flows and expenses to make sure that the property yields the required returns. And downside protection, there we look at your level of leverage and the strength of your structure. So if if your structure is relatively geared and has sufficient equity from your sponsor, then obviously the bank takes less of a risk and knows that you as the sponsor have skin in the game as well, and have just as much to lose as the bank does, unlike in the previous property booms where banks were funding at extremely high levels, high loan to values, loan to costs, and which resulted in the bank carrying majority of the risk. So if you are able to demonstrate that you have equity and you have skin in the game and you have something to lose as well, that also goes a long way in making sure that your call it application is successful.
Fantastic, thank you. And maybe a follow-up question from that I'll ask later in the end is maybe what that means for SMEs and startups, right? And rightfully so. Like banks are looking for skin in the game right now. They're looking for strong sponsors, etc. All of the things that you've mentioned. But what does that mean now for SMEs and startups? Where do they go for funding?
Do you want me to answer that now or later?
Go ahead.
Yeah, I think there's a fundamental difference between banks and institutions like the IDC and other government-related type of institutions. So, whereas the IDC and the PIC and other government-related institutions, while they chase returns and etc., but for them it's more important to stimulate growth, stimulate the economy, provide opportunities for people with the know-how and experience to try and scale whatever small operations they have. For banks, ultimately, it's about the bottom line, and I think that's the main difference there. And so, for you to reach a point where you are, you have the bank lending you 500 million rand for a transaction, you can understand from the bank's perspective, you have to mitigate risk factors, and you have to demonstrate that you are able to you know result in the bank yielding income or yielding positive results, as opposed to the bank finding itself in a default scenario, which is definitely not optimal for them. So again, it all comes down to different roles that the different financing institutions have. And from a bank's perspective, it's definitely about not about love and charity. It's about it's about returns. But there are specific institutions that are government backed and funds in the private sector that prioritize. And again, I want to reiterate that it's always important for a transaction to make commercial sense and to have appropriate returns. But ultimately, they prioritize the social building, the empowering of small businesses and scaling of small businesses and such.
Thank you. Thank you for that, Neo. Great answer. And then for Sally, next question for you is, which property sectors do you believe are most resilient in the current cycle, and why?
Thank you. I think for one that is currently outperforming all the other asset classes is industrial. Industrial is performing very well, and it has been for the longest time. It's attributed by low vacancy rates. There is like a huge demand with regards to e-commerce and logistics. There's also a year-on-year growth in rental due to the gap in demand and supply. So it is performing very well. Western Cape is leading when it comes to industrial. I note that the current performance even exceeds the performance benchmarks pre-COVID, which is really, really great. So industrial is performing quite well. And I remember I was having a conversation with fund manager at Future Growth Asset Management, and they were looking at opening a fund specifically for the industrial asset class. So the industrial asset class is performing really well. And another one that I want to touch on is residential. We are in a recovery cycle with regards to the residential asset class. And I like to distinguish between two types of recoveries. One that is linked to interest rate fluctuations. That's like a technical bounce because it can reverse should interest rates hike. And then there's like a genuine one, which is then underpinned by strong demand that is attributed by demographic growth, urbanization, and undersupply of quality rental and ownership stock. Those remain constant. If there are those factors, then the asset class will continue to perform very well. And once again, Western Cape is leading when it comes to resi. There's internal migration, there's tourism, foreign investment, and the prices are insane. I'm living through it right now because I live in Cape Town. So those are the two asset classes that I want to touch on. And then office, I think recovery within the office space is still a bit slow post-COVID. There's also an oversupply with regards to office space. So there is there is like a fairly high vacancy rate, but then also that is very node specific. So when I look at office, I don't just want to look at overall, because it can be very node specific. Some nodes are performing fairly well and other nodes have high vacancy rates. And then with regards to retail, I think that small convenience centers and malls that are anchored by grocery stores perform very well with regards to, there's a lot of footfall, and people, even in a recession, people need to buy food, as much as the disposable income can lower, but people still need to visit and get essentials. So the small ones and grocery anchored centers are very resilient in economic downturns.
Fantastic. Thank you for that. Thank you for that response. And then the next question is for Mukameli, and your response to this question will probably overlap with what Mihlali said, which is perfect, right? Because you're answering from a deal maker perspective. Where are you currently seeing the most attractive opportunities by sector or geography?
Thanks, Nanda. No, I think you absolutely spot on, in the sense that my response would overlap with Mihlali's, because for the most part we see traction in the industrial space, and most of the, how can I say, sexy kind of transactions are actually coming from the Cape Town area. So I think for me, what has become an interesting development recently, which I think will actually help the office space recover a lot, not quicker, but I think a bit more structured than just people having short-term leases to help push the recovery of it, is the conversion of office spaces into residential properties. I think that's been a very innovative approach, and I think a lot of credit has to go to Africrest, that has been pioneering this, especially in understanding that they've been targeting offices, places to convert into residential that are very well located to places of employment. So I saw there's one recent development in Sandton that's not so far from Sandton City. And I think what I like the most about it is they are conversions, given the fact that a lot of the conversion costs are lowered by the fact that they are reusing existing material. This is actually good for the environment. So from an environmental perspective, this goes a long way, because a lot of materials are reused. But also I think it helps them with their rental price points, and they are able to actually start playing closer to the affordable housing space, because they can get decent tenants in that 8,000 Rand mark. So that, I believe, is for me in the market probably the one thing that I find the most interesting. But yeah, most of our deals are coming from industrial, and most of our clients are essentially growing in the Western Cape. But we have a lot of resilience in Gauteng, and also in our inland areas like Limpopo.
Fantastic. Thanks, Mukameli, for that. And then our next question is for Neo, and your response to this may overlap a bit with your previous response, and that's okay, right? But what are the biggest shifts you're seeing in how property deals are being structured in today's market? And previously you spoke of your, I think, loan to value. You spoke of how it's affecting sponsors, and some of the requirements that the bank has. So maybe if you can touch on that again, just to say, how are you then structuring deals differently? I mean, in response to today's market and the market shifts.
Sure. So yeah, I think in previous years, or in different markets, or property markets, it was all about optimizing returns and making sure that there's strong cash flows to an asset. Now it's really more about ensuring survival and certainty, right? Banks have, yeah, you're right, it does sort of overlay with what I was saying earlier, but we're seeing lower LTVs in terms of capital stack. When you consider the capital stack of a transaction, we're seeing the banks putting in lesser, because obviously risk is definitely a thing at the moment. But at the same time, that gives opportunities to people in the private market, your funds, your private equity players, to then come in and provide mezzanine type facilities to bridge the gap between equity and senior debts on transactions, right? So sometimes banks also choose to play in the mezzanine space as well, but obviously price differently for that, as opposed to the pricing you would get on normal senior debt, right? And there's also, I think, embedded protections that are being included in transactions now to protect banks or financiers in an all falls down scenario, right? There's cash reserves that are taken as collateral. There's covenants being put in place on balance sheets. Funds are being paid on either cost to complete or a phased approach, as opposed to providing all the funds at once up front. So there's, I think, different types of ways that banks and financiers are going about ensuring that they take appropriate risk at the right level and get compensated for that, and also ensure that they don't find themselves come in all falls down scenario. They don't find themselves without any protection from a security perspective.
Fantastic, thank you for that, Neo. And then Mokameli, just a question for you, which is how are you navigating tighter credit conditions while still closing viable transactions? And this may lead from Neo's response, but I'd like for you to focus on the security aspect of it. As he touched on it, I'd like for you to maybe take it from there and add whatever else, obviously, that is relevant to the question.
Okay, thanks, Nanda. So I think for us, right, one of the important things we always have to navigate is there's short-term credit concerns and then there's long-term credit concerns, right? So in the short term, there's obviously the interest rate, which is a big concern and something that we have to manage very closely because it has an impact on cash flow, and property is really all about cash flow. And obviously the expenses related in this transaction. So we try as much as possible to finance asset classes that we are familiar with as a bank, and we try to minimize and mitigate that risk as well, try to support clients and jockeys that we really are familiar with and we know that they are familiar with what they are doing. And the approach we really take on that is, yes, we do like for you to still come forward with skin in the game, but if the asset behind it and the person behind the transaction is good, then we do try to stretch ourselves as much as possible, because there's immediate constraints within the commercial space whereby there's competition. Competition amongst us as banks has been very rife. So as much as to safeguard ourselves, we would like to lend at more conservative lending hurdles. There's other banks who are trying to increase market share in these tough conditions. And there's competition. I mean, Capitec is on the rise now. I actually think by market share, they've overtaken us as FirstRand. And to grow, they're going to try and build up their business banking. So they're coming for our clients. There's African Bank that recently bought and acquired Greenrod. So they're also coming. So we do have to stay agile. And the main thing we're trying to do is we're trying to make sure we support the right jockeys and the right kind of assets so that we can still be exposed at levels that give us a competitive advantage.
Fantastic, thank you. And I want to just move from the technical side for a bit, and then I'll open the questions up to our audience, because you guys mentioned your journeys earlier, and I guess some questions came up that I think would be, the answers to would be valuable to our graduates who are on, and even our students who are currently on the live watching. So for Mihlali, I think my question for you, you spoke about how you, and you'll correct me if I'm wrong, how you pivoted from asset management, right, into project management, and now you are stationed with the Western Cape government as a property economist. How does that work, right? That career pivot from asset management to project management to where you are now. What does that look like on your end? And how did you make those pivots?
I think, sure, I really don't have a formula when it comes to these things. I see something and I really apply for it, and I try to position myself best with regards to that role. The nice thing is that just within the built environment, just with regards to how interlinked it actually is and the relationship, it's easy to transfer skills onto the next role. So I think it's just really that, like, I really don't have a formula. If I see a role, I look at the description and I see what have I done that pertains to the role, the current skills. If there's a gap, how can I transfer those skills? And then also you have to, short courses is a nice way as well in terms of bridging the gap between where you are and what you want to do without necessarily going the traditional route of varsity again. But yeah, that's what I do. I see a role, I look at what I've done and how I can transfer my skills, and then I go for it.
Oh, thank you for that. So short courses and just putting yourself out there, basically not limiting yourself in any way. Yeah, thank you for that.
Don't limit yourself. Like, if I limited myself, I wouldn't have been an economist, really, because I think one of the requirements was a master's in statistics or something, and I was like, I'm applying anyway. I feel like I could do this, and here I am.
I love that. And then, Mokameli, you, in your journey, moved from deal management, which is operations, to, correct me if I'm using the wrong terminology here, but a deal maker, but client side, right? And then from client side deal maker to then lender side. How does that move from operations to sales happen for you? And I say this because I know a lot of young people in the space, and maybe even not so young people, are at a place where they're trying to make that move from operations to sales. And what would you say, gave you that advantage or that mobility?
No, thanks, Nanda. So, I think, I think there's a huge luck element to it, right? There's a huge luck element to it, but I think what I'd advise people who are trying to get into the space, because it is a difficult space to get into, is I think there's no excuse for the dirty work, getting your hands dirty. So knowing property, I don't want to call them clubs, but for instance, there's SIBIPs, there's a lot of communities where people host events, host high teas for females, and a lot of industry professionals do go to those spaces. But also, I think with the benefit of LinkedIn, it wouldn't help to, if you reach out to someone on LinkedIn, maybe try to be narrow to your request. I'm studying this, and I was hoping you could have a coffee just to assist me with guidance on a career path. I see you followed a path that I'm interested in going for, because I think of the inboxes that sometimes I come across, perhaps what I always tell those graduates that email me or write to me on LinkedIn is, I've got no problem with making time, but you must realize people at work barely, or let me speak for myself, sometimes you barely go on LinkedIn, and 4 days will pass and you find there's a message I haven't responded to. So I think when you get the opportunity to speak to a professional that's in the space that you want, try to, let it show in your energy that you want to be here, and the conviction. And the worst that can happen is someone says they're not available or they can't pass your CV to HR. Because look, the unemployment rate in South Africa is pretty high. There's not as much opportunities as there was 10 years ago. So I mean, I realized this so my brother recently graduated in actuarial sciences from UCT. 10 years ago, and I was studying, that would have meant you've got 3 or 4 offers lined up. But yeah, he was unemployed for about 4 months, just trying to find an opportunity. So for me, that's when it really sunk in that it's actually pretty difficult out there in the job market right now. And I think there's absolutely nothing wrong with being out and out asking for a coffee. If someone's unavailable for a coffee, ask for a time they're available for you to go, for you to see them in their office. And yeah, put yourself out there, market yourself. It's really not an easy space to get into. I think I only got into property finance after 5 years of working. And throughout those 5 years, I was trying to speak to people, and there's disappointments along the way. Not every You won't have a coffee with someone and then they give you a job. I can guarantee you that. But there's so much you'll gain, so much you learn, and I think just being genuine about the connection, right? So if you ask someone to be your mentor, you shouldn't just do it because of how their CV looks, but it should be someone that you know would understand your background and where you're trying to go. So I only have two mentors, but they've been my mentors for 10 years because they're from the Eastern Cape, from close villages. They understand what I've had to do when I was 20, 25, 30. They've been in those shoes, and it helps that they are leading in their careers as well. That helps them share knowledge and insight instead of placards. Yeah, do this, read books, um, all the motivational stuff that sometimes doesn't help. So that really would be my advice based on my experience.
Thank you for that great advice. So you're basically saying network and network with intention and not haphazardly, right? Yeah, thank you for that. And then Newa, my question to you is, as someone who's gone the traditional CA route, you mentioned that you'd always known that you wanted to be a CA, and there was that, there's always that contention between audit and maybe the other thing, because there's so much you can do, right? The world is your oyster. But then you landed up in deal making within structured property finance. Pardon me. Could you maybe, I don't know, give some words to those who are on the journey that you are on, pursuing the CA designation, and maybe thinking audit is not for me and I want to do what Newa does,
Yeah.
What does that look like?
Yeah, so I think it's crucial. While it's great to get your exposure from the big four audit firms in articles, and what that does is it if you likely to try and get into a bank, it will land you in a middle or back office type role, as opposed to a front office role. You'd have to work your way to the front office. So I think what was crucial in my call it path is, I immediately went to client facing from the beginning, and established myself in that space, built the personality for it. I think it requires a certain personality to deal with clients on a day-to-day basis. You build the personality for it, and it's not something you just inherently. I think you'll have in some characteristics inherently, but you build the personality for it over time, as you develop yourself. And I think that just going to KFC as well, I was completely client facing with franchisees and working with them on a day-to-day basis. So when I wanted to make the transition into structured property finance, I could speak to something other than my technical skills, right? Because when you qualify as a CA, a quantity surveyor, an economist, etc., you sort of prove that you have the ability or the competency when it comes to the technical part of it. I think what was important, or in getting into the space and immediately going into the frontline or sales type of environment, was the other attributes that I was able to put on the table. I was able to demonstrate my thinking in terms of being client centric, understanding client needs, being able to service clients, and very importantly as well, being able to leverage relationships within the working space as well, to ensure that I deliver the best product or best service to a client. I think that for me was the differentiator, that would be the skill that I picked up in the path that I took to qualifying, as opposed to what I would have picked up going the audit route. So yeah, I think if I had to summarize it, really, it was my ability to pick up a skill other than my technical skills, and to be able to put that alongside my technical skills when trying to get into the space.
Thanks for that. Fantastic. So if I were to summarize it, I would say you're saying build the soft skills as well as while you're building your technical skills, build your soft skills as well, because they contribute to your success. Is that right?
Yeah, I think definitely that. But at the same time, you pick up certain soft skills in certain environments and certain types of businesses, right? So try and align the skills that you're trying to pick up with where you are looking to be working, essentially.
Perfect. Thank you for that. I'm just checking to see if we've got questions from our audience. And then if we don't, we can wrap up because we're slightly over time. Let's just see if we've got comments. Let's see, we've got a comment from Moshe. I don't want to butcher your surname, Makobate. I hope I said that correctly. Moshe says, good day, everyone. I'm Moshe Makobate. I am a structural engineer with almost 2 years in the engineering field. I have grown interest in the finance space, CIB. My interest is property finance or infrastructure / development finance. I'm seeking ways I can use to enter the space. Hopefully I can get insight in this live session. Appreciate the opportunity to be in this live. So I hope that was insightful, Moshe. And then, like I said, if you have any questions, please join our community. You'll find Mihlali there, Newo there, as well as Mukameli, and an array of other people that you can reach out to and just ask questions, and we can connect even beyond this platform. Which I thank you for joining us. I'm not seeing any other questions come through, so I'm happy to wrap up because we are also over time. I just want to thank you guys so much for taking out the time to join me today. And thank you for just bringing your all and answering all of my questions and engaging and preparing for the session. Thank you, Newa. Thank you, Mihlali. Thank you, Mukameli. I don't know if you guys have anything else to add before we close off. Or are you happy? Are we happy? Yeah. Happy. Okay. Thank you guys so much. Hopefully this is not our last rodeo, and we'll be connecting